Good evening, everyone. Time for another silver update. Wanted to give a shout out to Endless Mountain. Thanks for covering my channel. Appreciate all the subscribers you sent my way. If anybody hasn't subscribed to Endless Mountain, you can find his channel listed under my homepage and the channels that I list there. He's the first channel listed. So go ahead and subscribe. Great page, and does a lot of technical analysis. Wanted to get back to the chart that we've been following for a while now. Didn't draw the $3 trend line. Let me draw that real quick here. $3 a month trend line that was broken. You can see I've marked the $28 line. We appear to be correcting back to that. I point out $28 may be a buy point for some people, or you might want to buy a portion there, see if we go lower, buy more. As you can see on the MACD, we're falling very hard against it. We're back on the daily now, which stretches all the way back to almost to 2007. You can see the big crash we had. There was the Bear Stearns crash from 21, and then it rallied into the summer, and then they brought on the great economic calamity, which took silver all the way down to below $9. As you can see, the MACD that fell at that point, it crossed through the zero line here with quite a bit of momentum. That really didn't create that much of a drop. It was the next leg down when we rose up and then crossed back down and crossed through the zero line with really quite a bit of momentum. We went all the way down, and that's when we got the really big drop. So we're doing something similar right now. We're almost at the 0 point. The red line seems to be touching. We're about ready to cross down through. We'll just have to wait and see how far down we go, where the bounce is. As you can see on the former trend line that we had here, this is roughly about a 75-cent a month rise, and I've drawn a line to mark that out and what sort of rise we're at. Plus I've marked the top point of the last kind of blow off top we had, which is around 21. As you can see, these two lines are moving to meet each other. If the price keeps dropping, we may get buy at $25, or we may actually test all the way down to here. I would expect that if we get to 25 or below, we're probably going to reach a MACD of down near where we were in the fall of 2008, and that's going to have a lot of implications because that was a really big deflationary scare. That was a whole financial crisis. But as you can see, we're heading towards an oversold condition. Again, without the price reflecting it. It's reflected on the MACD, but the price still hasn't gone that low. So we'll just have to wait and see where we bounce. If we bounced right here, it would actually be a very healthy rally point, and I could see us just taking off and going right up to 35 or even higher. It doesn't mean we're going to bounce right here, but we could. We're already, not on this chart, but on the next chart, back on the 8-hour, you can see we're more oversold than we have been since February on the 8-hour. If we go back to the daily, if this continues and we fall and break this point and this point, then that would put us more oversold than we've been in more than 2 years. So that's a very healthy it's a very healthy consolidation. If you go to Endless Mountain's channel, he does an analysis based on price point analysis that shows you how long the price has stayed at a certain point. And the 28, 29 level is really starting to build a lot of support at that level. Doesn't mean we're not going to drop, but we seem to be consolidating in a way that the market is kind of digesting these high prices. I wanted to point out some articles. We have one that's on Zero Hedge that refers back to an earlier article I referred to where we had some shortages coming out of Germany. Now we're seeing apparently some shortages in the UK. You have to remember that a lot of people, they argue, well, this isn't a shortage or that's not a shortage, and they point to, well, APMEX has got a lot of bars and this and that. You have to remember that a lot of these are very small places. Some can run out before others. It's just the general trend, and you can't, it doesn't all occur in one place. Now, in 2008, right after Bear Stearns, when they really brought it down, pretty rapidly everybody ran out. We don't seem to be seeing the same thing here. We are seeing tightness, and the fact that we are at this price and we're seeing tightness, that tells you that we're not anywhere approaching a bubble, because if we were doing that, then there'd be a lot of people lining up to sell their silver, and they're not. A lot of these places actually buy silver with a decent spread. I know APMEX does, some others do. Don't see a lot of people coughing up their silver. So it appears to be very healthy. We're seeing a tight market at high prices, and it's churning and consolidating, so looks real healthy. We'll have to wait and see. The other site I wanted to point out, you might not be familiar with. I use this site a lot to check tightness in the market. Just as an example, well, you go to bulliondirect.com, and they have a link for their Nucleo exchange. You click on the link for silver. They also have gold bullion, platinum, and palladium. And basically, this is a buy-sell market just for people who are trading with each other. And in the last really tight silver situation, you didn't see what you're seeing here. As you can see, the spread's pretty good here. You got a bid of 30.80 for Eagles, and 30.85 is the ask. That's tight. You got your monster box here at 15,300, and they're asking 15,400. So those are pretty tight. You want to click on them and see the available supply. So we'll take a look at the individual Eagles. You can see you've got about 1,000 or so. Now, this isn't a real big site, so you have to get used to the numbers and become familiar with them so you know what to look for. 1,000, that's a decent amount for this site, and they're around $31 or so. You can see your bids. You've got a couple people coming in here. The bulk of the bids are around 30.70, so not nearly as many buyers as you've seen in the past. So for the Eagles, we're not seeing a real tight market. The monster boxes, now that was one that I really paid close attention to in the last tight situation, and they just dried up. So if we look at the monster boxes, if we see a good number of monster boxes, and I'm assuming these are going to be 2010s, because I don't think the 11s are out yet, but we got 10 monster boxes. Here's some high ones, but there's 10 of them at 15.4. We've got someone who wants 100 of them at 15,000, so looks like a fairly decent market. You also want to go down and check the named bars. You've got the Johnson Matthey 100 ounce, and you've got the Engelhard 100 ounce. Those are two really good indicators, because those are the real popular ones. They tend to have a premium to them just because they're so well known and so well respected. So again, we want to look at those, see how tight the bid ask is, and see how many bars we have offered. So you can see here we've got 800 ounce bars at $28.95. We jump up to 29, so we've got a decent amount, maybe 10 or so. There's a big buy here at $28.30 for 500 of those bars. So there's a pretty strong bid on those, and that's the Engelhards. The Johnson Matthey, where did we go here? Let's see. The Johnson Matthey 100 ounce bars. We've got not a lot of them there. Doesn't appear to be a lot on the ask. Maybe 12 or so. This one at 6,000, that's ridiculous. So in here around 3,000, we've got about 13. We've got a huge buy order around 28.30, and so that's still above spot. Looks like pretty strong demand. You can also go in and look at some, you can look at your 90% bags, and let's see. The big one is of course the 1,000 face. You can see there's about $1,000 spread there. And we'll see how many we have. We've got nine on the offer and 75 on the bid. So that's most of these are showing fairly tight. Not anywhere like I've seen in the past when we're really tight. When we're really tight, you won't even see them on the ask. I've seen the Johnson Matthey here and the Engelhard with bid and 0 ask. None available. I've seen the American Eagle Monster boxes with bids and no asks. That was back in 2008 when the market was really tight. You've also got mint crates of the Maple Leaf, and that's also a good one to watch. And that looks tight too. We've got 25 at 15,000. That's $30 a coin because they're 500. And there's one for sale at 19,000. So overall, this is not the tightest that I've seen it, but it's pretty tight. So it seems to be consistent with the what Zero Hedge is seeing, and Germany and England, and also pretty consistent with the fairly tight consolidation that's going on right here. Fundamentally, I would not expect the price to go much lower. Just based on the fundamentals, the way they're shaping up right now, I wouldn't expect us to go below 25. But again, this is a paper price, so they can do what they want. We'll just have to wait and see. And talk to you next time.